Oh, Hasbro, 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 what a tangled web you weave. It seems the toy titan has stumbled. Hard. Hasbro recently announced a second quarter revenue fall of a whopping 18% year over year, dipping from about $1.2 billion to $995 million. Ouch. But wait, there's more. Excluding the sale of its E1 film and TV unit, revenue only dropped a mere 6%. What an improvement, right? And amidst all this turmoil, reports are swirling that Hasbro might be eyeing a takeover of rival Mattel. Because when you're struggling to keep your own ship afloat, why not try to commandeer another? On the brighter side, Hasbro managed to swing to an operating profit of $212 million from a loss of nearly $189 million last year. Net earnings for the quarter hit $138.5 million, dramatically up from a $235 million net loss a year ago. Bravo, Hasbro, bravo. These gains are thanks to $40 million in net cost savings for the quarter and around $90 million year to date. Hasbro's on track to hit its full-year savings goal, cutting costs like a pro. Diving into segments, Wizards of the Coast and Digital Gaming saw a revenue growth of 20% year over year to $452 million. Magic, anyone? But let's not forget, entertainment revenue plummeted 90% to $18.8 million, or 30% excluding the E1 sale. Consumer products revenue dropped 20% to nearly $525 million, resulting in a $9 million operating loss for the quarter. Hasbro blames business exits and entertainment timing. Sure, Jan. CEO Chris Cox says Hasbro's consumer products performance is within expectations, and the company is becoming more profitable, improving operations. But the numbers? They tell a different story. Meanwhile, Mattel, Hasbro's arch-nemesis, reported a mere 0.7% slip in net sales to $1.1 billion. Net income for Q2 rose to $56.9 million. Hasbro talking takeover? Please, they should focus on their own turnaround first. Cox remarked that digital growth is crucial for Hasbro's future. Well, duh. He also noted that the toy company is still in the long game of turning things around. Innovation is working, he says. Is it really, though? He added that over 60% of Hasbro's revenue comes from consumers 13 years and older, the so-called kidults. Sounds like a desperate attempt to stay relevant. Hasbro even raised its full-year guidance. Consumer products revenue is expected to decline 7% to 11%, a slight improvement from the previous 7% to 12%. Wizards of the Coast revenue is expected to decline 1% to 3%, slightly better than the previous 3% to 5%. Way to set the bar low. Hasbro has also shuffled its leadership deck. John Haidt is now president of Wizards of the Coast and Digital Gaming, replacing Cynthia Williams. Dan Shull is the new Chief Digital Information Officer, and Stephanie Beal is the Chief Supply Chain Officer. Will these changes make a difference? Time will tell. So, investors, what's the real story? Hasbro's struggling, trying to save face with cost cuts and leadership changes, but the numbers don't lie. Keep your eyes open and wallets closed. Subscribe for more insights, and let's see how this toy story unfolds.